You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is time once again for TWIFO. This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence and everything that encompasses. Maybe that's ags, that's equities, that's metals, that's energy, that's dairy, that's lean hogs. You never know what the heck is going to make it onto the show. If you have a crazy esoteric product you'd like us to break down, hit us up. We're pretty nice guys here. We'll try to accommodate your request. If there's some options volume, sometimes these products have a handful of contracts. There's not a heck of a lot to parse out there. But if there's some flow to it, and it's intriguing to us and to our audience, we'll sink our teeth into it. My name, of course, Mark Longo from theoptionsinsider.com, as well as from this fine network upon which you're listening to this program right now. Hopefully you like what you're hearing. If so, leave a review on your platform of choice like many of you have been doing. Keep that 5-star love coming. Keep the new listeners flocking not just to this program, but indeed to the full network out there. There really is nothing else like this show out there that's really diving deep into the world of futures. Actually, probably could do it every day, probably for a couple hours a day. But alas, we only have 1 hour to squeeze it all into over here. But we'll try to keep your needs met here on the TWIFO program. And of course, if you have a question, comment, hit us up. We do love to hear from you guys. And joining me today in the old FTSE Russell hot seat, I'm pleased to say he's back from parts unknown, our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to the program, sir. It has been too long.
Mark, thanks for having me again. It's always good to be on the show, and I'm looking forward to having an exciting conversation with you again today. So thanks for having me back.
I'm glad to have you back. Last week we had Mr. Rhodes doing double duty, holding down your seat and the CME seat. I'm glad we could have you back here, holding down the proper seat, sir. You know what I'm going to ask you next. Now, I know what your usual answer is, but I'm just going to float it out there. you may want to reconsider. That's all I'm going to say, sir. So where should we begin our journey when we break down the top movers and shakers of the week, to the light side or to the dark side, sir?
I'm going to take your guidance here and reconsider and go dark side.
Excellent choice, sir. You'll see why in a second here. Breaking down the dark side, of course, you guys can play along, do the movers and shakers, and, of course, all the This Weekend reports and everything else for yourself. CMEgroup.com/TWIFO/TWIO, TWIO also works if you want to go that way as well. Either way, that way you can type in whatever product you want. So if we don't hit it on the show, you guys can hit it for yourselves and then get all the salient info, the vol, the volume, the skew, all that good stuff, the hot strikes, all that good stuff. You can also see what's moving and shaking like we're doing right now, going back all the way to last week's show. What's lit up the tape since then? And let's dive into the dark side first at the request of our friend, Mr. Sean here. Number 5, oats. Oats having a rough couple of weeks, upside and downside, moving a bit, which is kind of nice, a little frothy, like a little bit of vol out there. This week, only off 1.25% or so. By the way, another week where the movers and shakers are pretty biased. We're seeing mostly green on the screen again today, at least from the movers and shakers reports. Not a ton of red. Number 4, rough rice. Another rough week for rough rice. Say that 5 times fast. Off exactly 1.5%. Number 3, our old friend WTI giving up some of those gains of late. We mentioned last week, people seem like they were fading this upside north of 40. That seems to be the case. Off nearly 2%, about 1.91%. And then number 2, the only equity that can hold a candle these days to small caps, it's the S&P Mid-Cap 400 E-mini, off 2.49%. Mr. Sean, can you possibly guess what is our number 1 mover and shaker to the dark side this week, sir?
The hint is just screaming at me that we're talking the Russell 2000, so I'm going to go with Russell.
Quite possibly. Is that a product you're familiar with, sir? Have you heard of that one?
It's slightly familiar to me.
It's kind of in your wheelhouse. Yes, you are correct. What a fantastic guess, sir. You should buy a lotto ticket after this show. E-mini Russell 2000 off 3.33% this week. It was number 18 last week, and it was to the upside, up nearly 2%. So crazy swing, nearly 5% swing over the course of a week out here. Now off about 3.33%. Actually, looks like it's about exactly a 5% swing here over the course of a week. So crazy times. We said it before. We'll say it again. The Russell 2000. There's a reason why Sean's on this show every week. This thing freaking moves, to use the technical term out here. Now let's go to the light side where Sean usually hangs his hat. Our producers added a number 6 just for your own edification out here this week, listeners, because it's nat gas. Nat gas has been moving a lot. This week it's down to number 6 on the light side, up about 4.25%. Last week it was number 1 to the light side. That's why they added them in here. Up 11.13%. So nat gas has been moving and shaking, of course, as you saw last week. It's also because it's a very low-priced product right now, 1 and change out there. So you're going to see some big percentage swings with some small movements out there as a result. Number 5, our old friend, the Eurodollar, up 5.56% out there. Then we've got, old friend Casey Wheat popping in here as well, up 6.5%. Number 3, just straight up wheat, our old friend, the Chicago Wheat there. It's up about 7.33%, a little more than that, up to the upside this week. Numero dos here. We've got iron ore, up 8.08%. Last week was number 1, so it's been a good 2 weeks in a row at about 7.5% up last week. So it's been a pretty strong couple of weeks for iron ore. And number 1 to the upside is our old friend lumber out here, up about 9.25% out here. And before you ask, not exactly a ton going on from an options perspective in lumber. It does a whopping, so far this week has done a whopping 116 contracts out there. So not exactly lighting up the tape out here this week, listeners. Unfortunately, we won't have a chance to parse lumber. If you have the same, what about iron ore is number 2 this week? Yeah, it's got 20 contracts on the tape as of right now. So unfortunately, won't be parsing that one either. So Mr. Sean, you haven't been on a little bit. I will leave it to you. We have a broad purview at our disposal. Where should we begin our journey this week, sir?
I of course wanted to talk about some of the interesting things going on with Russell. Or should I say FTSE Russell and the Russell 2000 Futures Complex. It's been a fantastic June at CME Group in terms of average daily volume. With the month of June, the Russell Complex has been averaging over 415,000 contracts a day. and they're averaging year to date over 325,000 contracts a day. That's head and shoulders over last year. So we're like very, very excited to see this liquidity. And what does that mean when you say the index is moving? It's extremely tradable with the liquidity you can get at CME Group. So it's just very exciting to see the moves, but then also the ability to get in and out of your positions when you need to hedge or to take a stand or to be investing or to be just hedging risk. It's just fantastic to see those types of numbers coming out of CME Group. And the other big factor is, 500,000 contracts of open interest are a very good, strong indicator and anchor of investability when they're holding their positions in these contracts. So you have just a broad spectrum and truly global reach, as we've talked about on many of the shows. So very exciting to see. Did Russell Rhodes last week go into recon at all, or the results of recon?
We touched on it briefly, but we were kind of saving that for you, sir, because that's kind of your baby. So have at it, sir.
Okay, great. Just a couple of tidbits in regards to the closing cross on June 26th, which is the culmination of reconstitution before the new indexes opened on June 29th. Over 1.57 billion shares traded. That's up quite substantially from last year. So it is a record in terms of notional value, north of $125 billion of a notional value traded hand. So very exciting to see us break volume and notional value record on Recon Day. And all of this happened within a second, a little more than a second of trading on the close at NASDAQ and NYSE. So it's very exciting to see the closing cross mechanism working at NASDAQ and the closing auction working at New York Stock Exchange. And just an exciting day to see those types of records. We've talked about the breakdown of the large caps getting larger and small caps getting smaller. So I won't go into that today. But just really exciting to see these numbers and this performance back on June 26th. So that's kind of my quick recap for you.
Yeah, big time. Are you guys all in FTSE Russell now, just taking a vacation off to the hinterlands? Your big days behind you for a little bit, sir?
These markets are so volatile. There's no taking any breaks. And, we're a global organization, and we have products represented across the entire global market in equity and in fixed income. But on the equity side, we manage, there's a $9 trillion benchmark to our equity complex, and just under $15 trillion total that's in combined fixed income and in equity. So we're very excited to see investors having the index products they need, the fixed income and equity products that they need. And our partners, SIBO and CME Group, do such a tremendous job of distributing these products globally to our clients, to their clients. We couldn't be more excited. So no, we're not resting. We're growing. We're expanding. We're looking to do more and have bigger and better opportunities to provide those solutions for our clients. So we're continuing. No breaks here, my friend.
No rest for the wicked. I think there's some listener questions about that in a little bit there, Sean. So stay tuned. Since you're talking equities, a hot week for the equities, of course. Market's taking a bit of a break. The bull taking a bit of a respite out here right now after a hot and heavy couple of weeks where the bulls were firmly in charge. Today, coming to showtime, we're seeing a break across most of the major indices. If you're wondering which index is leading us to the dark side, yep, it's a rut, off about 1.5% right now. That's outpacing all the other indices. The Dow is the next closest at about off almost 1.3%. S&P looks like paring some of its losses, was off about 0.75% earlier in the session. Now it's off about 0.6%. So maybe cutting some of those. We'll see. NASDAQ continuing its charge, up about 0.4%. So that's the only major index in the green today. Our old friend VIX Cash Earlier today, it was feeling a little bit more juice. Maybe some of the sell-off mitigating in the S is giving some of that back. It was at about a 30.5. That puts it up 3.5 points from last week. Now coming into a middle portion here, a quarter-way portion into the show here. It's a little bit north of the 29, about 29.15. That puts it up a little over 2 handles from where it was this time last show. Our old friend RVX was threatening a 39, about 38 3/4 out there. It puts it up about 2.5 from last show. And our old friend VVIX, the vol of vol, was at about a 120. It puts it up about 2 points from last show. So that spread coming into showtime was at about 8 1/4. Seems like it has actually widened out a little bit. It's about 9 and change now. So it was 1.5 points tighter than last show. This week it's now about a 0.5 point tighter, it seems like a show. So that spread, it's a fun one to watch. I said it before, listeners. Small cap vol versus large cap vol. And that spread, it's, even though it's tighter this week and it's in from the whatever 13, 14, 15 points it was not too long ago, it's still very wide. We had Rick Rosenthal obviously on the show not too long ago, and he mentioned that historically that spread's around 3 points. So we're 3x or so where we usually are out there. So small caps rocking and rolling. If you're intrigued about all things equities, I would encourage you, check out our friends over there at CME. Blue and Eric do great research over there. They put out some interesting stuff right now about dividends and kind of dividend expectations and maybe how volatile those are in and of itself. Maybe we need a new measure of volatility of dividend expectations. They have a great paper. It's called How Investor Expectations Have Changed with Equity Prices. And it's all about dividends, listeners. Check it out, cmegroup.com, if you are indeed so inclined. They break down some of the salient points. I'll just hit the highlights here for you. It's a pretty, as all their stuff is, pretty lengthy and pretty detailed with a lot of great charts. I encourage you to check it out. They mentioned equity market hit a low March 23rd. And the 2 weeks later, on April 3rd, they looked at the expectations for future dividend payments by way of the S&P Annual Dividend Index Futures. Not a product we talk about a lot. Those actually reached their low 2 weeks later. So the market hit their low on March 23rd. April 3rd is when the dividend index futures in the S&P hit their lows, which is interesting, a little bit of a lagging indicator perhaps there. At that point, they said investors priced in dividend payments would fall from 58.22 index points in 2019 to 40 in 2020 and to 33.75 in 2021, a 42% drop over a 2-year period. That's pretty much twice as large as the decline in dividend payments that we saw during the actual financial crisis of 2008 to 2010. After hitting that bottom, we saw the index futures over there pricing in that dividends would hit 58.215. Again, this is in that nomenclature of that S&P index future, listeners. By 2028, it's a long way down the road. And they'd go to new highs of 63.6 by 2030. So they're pricing in roughly a decade of dividend depression as a result of this. You certainly wouldn't know that by the recent run-up we've seen in the equity market. Of course, between that time, April 3rd and July 6th, which I believe is when this report was posted, the market has rebounded, the S&P at least, by 25.5%, hitting or very close to its record high from February. We've also seen, as a result of that rally, dividend expectations also increasing, although kind of limited in that perspective. As of July 6th, the S&P 500 dividend index futures pricing in that we would hit 55.8 index points by 2020, so the end of this year, and 50 double actually by 2021. Compared to that low point, which was April 3rd. So far already from the low of dividend expectations on April 3rd, as the market has rallied 25%, there's been a 40% increase in dividend expectations for 2020 and a pretty much 50% increase for 2021. So kind of a little known, little heralded bit of volatility, the volatility of dividend expectations. Not a thing I had thought about going into this show. That's why I always like seeing what Blue and Eric are up to, because they're always cranking away and crunching interesting numbers. Sean, I don't know if you had a chance to check this one out, but it's kind of a fascinating area, one we don't explore a lot, which is the volatility not just of dividends, Sean, but of the expectations of dividends. Sean, did this one surprise you as well?
No, it's actually a really interesting topic, and dividend index focus makes all the sense in the world to me. It's a major component of stocks and indices and other products. So investors want to be able to hedge that risk, especially on the institutional side of the business where there's structured products and there's exposures and risks with dividends. And companies today in today's economy, they're moving. dividends. They're reducing them, they're eliminating them, they're increasing them in some cases as well. So with that movement, there's the desire to hedge that price movement. So I'm not surprised at all. I think it's and it's actually very interesting and exciting to see the growth in the product. So dividend index futures are a really interesting product today.
Yeah, again, not a product we talk about a lot, but maybe one we should. I don't think it has a lot of options paper on it yet, but certainly an esoteric product, but an interesting one and certainly a highly volatile one, much more than I think than anyone would have thought. So one to kind of put in our back pockets, maybe put the old thinking cap on and mull over what that means going forward. Mr. Sean, I will give you pride of place yet again, sir. We have the full panoply of Globex at our disposal, sir. Where should we head and hang our hats next?
Let's go with the energy route. How's crude doing?
Crude is doing, I think, as the kids say out there. And if they're not, I just made it up. So there we go, creating some new slang out here. It has been, as you mentioned at the top of the show, bit of a rough week for crude. Not quite clearly as rough as we saw not too long ago with the debacle heading into negative crude, but still a bit of a retreat off of that 40 handle. Some folks, clearly from the options we saw last week, that was a bit of a bridge too far, and the market's retreating as a result. Like we mentioned at the top of the show, crude through WTI is off nearly 2% from last week's show. And if you just look at the lens from this week, coming in from Monday's session, they're off nearly 3%, 2.93%, right around 39.5 as of right now in the show here, listeners. Remember, you guys can do this for yourselves, cmegroup.com/TWIFO. Grab the drop down, head into energy, then go into crude oil, and you're off to the races. I choose select all, but that's my purview. Maybe you can't handle all that goodness. It's up to you how much you want to see out here. If you do that, you'll see that the hot contract this month, or I should say this week, is the SEP contract. Looks like about a third, a little more than a third of the paper going up out here, about almost 37%, 36 and change out here in this SEP contract. And the number one with the bullet trade, though, it actually looks like it's a bit of a pretty close tie. SEP takes the lead, but only just barely. The SEP 30 puts 10,472, followed hot on its heels back here in the AUG. And this is not the weekly, it's just regular monthly AUG. AUG 44 calls, 10,380. These are expiring in about a week. I'm gonna start there just out of curiosity, because that one's a little bit surprising that AUG still lighting it up. Again, that shows, people have asked us many times, why don't the weeklies trade in WTI? And clearly they will trade with a week to go, the monthlies. They just won't trade the listed weekly. I don't understand it. We're seeing 418 is the biggest print in the week twos out there in July. And looks like the week 3 Julys are at, what we got, 150 contracts. But here in our traditional old monthly AUG contract, which has a week to go as well, this has 10,000 and change in one strike. So it's just a strange aberration of the WTI options market. I'm not really sure why that is, but that's the way it prints. Let's see, these AUG 44s traded 10,380. The big print on Tuesday, 4,577, slightly closing. Some folks may be deciding the market wasn't going to make that level certainly by 7 days. So they decided to get the heck out of Dodge on Tuesday. It looks like some opening, though, on Wednesday. Net actually was opening on this strike, about 1,200 contracts here this week, which is kind of interesting. I wouldn't have thought the 44 strike would be that hot and heavy here this week. Let's go out to the actual month that was lighting it up out here, which is SEP 30 puts. That sounds a little bit more like what I was expecting, given what we saw with the skew last week, and it seemed like people were fading that upside. So 30 puts, not that far off in the distance, perhaps, compared to what they've seen when we were north of 40 here. They've been trading a lot. The biggest day was Monday, 4,000 and change on Monday. Tuesday kind of light, 800. Wednesday back to 2,300. And today, 3,300. Pretty active day today as well. Total of almost 10,500 on the tape. Most of that opening, about 3,000 of that opening. A good chunk of that on Monday opening as well. Obviously, we don't have today's OI changes, so we don't know for sure. So 30 puts opening. That sounds like more what I expected coming into today's show. Let's look for any other crazy prints out here. Looks like the 35 puts did about 8,000 and change. 50 calls were actually surprisingly active out here as well, with about 8,500. So those would actually be our number 3 print here for the week. The big print coming yesterday, 4,300 yesterday, with about 2,000 of that opening, and about 3,200 today. So pretty active day for the 50 calls today out here as well. So interesting stuff afoot out here in WTI. Let's go to the skew, though, because that's what you guys are interested in out here. Let's got to go to SEP for that. SEP has 38, almost 39 days left to go, so it's a nice, robust skew we can actually sink our teeth into. It's not some crazy weekly that's moving all over the place. Again, the vol this week is light. It's about 1770. It puts it off about 1.1 points from last week. We were talking with Russell last week. He's very much into volatility, obviously, about how much of a volatility product crude has become. People don't think of crude that much, and certainly our old friend OIV got delisted. I think we have a question about that again later today as well, so we'll get to that in a little bit. But yeah, it's light vol out here, 17.5. That's certainly a lot lighter than a lot of other products you may be trading. Maybe it's an equity option. Maybe it's people have asked about Bitcoin. That's certainly was around 60. I think it's come off a little bit out there now. But 17.5, it's pretty light vol, certainly compared to what we've seen out there of late. Let's get to the skew out here. The skew last week, the puts were bid 9% rich. They had the money this week. They're pretty much about the same, about 8.8%. So those puts have maintained their firmness over the course of the week, even as vol has come in a little bit. Calls 5.1% cheap this week, 3.4% cheap. So calls a little bit less cheap. And vol has come in a little bit too. But either way, not a huge change in skew. Calls still weak, puts still bid. Kind of similar levels to last week. The calls are a little bit less offered. Read into those tea leaves what you will out here. So WTI has been a fascinating one, interesting one to watch. We continue to watch it, not seeing any more aggressive fade in the skew this month, listeners, or this week, I should say, but we'll keep an eye on it. Perhaps more things will avail themselves. Before we head out here really quickly, let's just look for any other interesting prints that are lurking out here. If you like some upside, DEES 2022 listeners got you covered. 60 calls, trading 1,000 contracts this week. Pretty much throughout the week, 200 on Monday, 400 on Wednesday, and 400 more today. So total of 1,000. It's like actually slightly closing, at least on the Monday print. I'm not sure what's going on with Wednesday and today, obviously. But interesting stuff out here. 60 calls. That seems so rich. Yep, we were at that level not too long ago out here. What's your outlook for WTI? What do you think? And what do you think about these skew numbers and the fact that the puts are still bid, calls maybe a little bit weaker? What does that mean for your prognostications for skew? What are you guys up to in terms of WTI out here? Let us know. We do love to hear from you guys. All right, Sean, we could talk a lot of WTI out here on the show, but we have other products people want us to delve into, sir. Anything else on your radar you want us to hit today, sir?
Yeah, you talked about small caps taking a 5% swing. Let's talk Russell and RVX and VIX and the spread, and I think it's just some interesting numbers this past week. So
yeah, we hit those earlier. It is pretty wide. Like I said, coming into right now, it's about it was 8.25. It has widened up a little bit because we saw VIX come in a little bit. It's like 29 and change now, so that spread is now about 9 points and change compared to where it was this time last week. Let's pull up really quickly, though, since you asked so nicely, Mr. Sean. Let's look at the actual Russell 2000 contracts out here, the E-mini Russell 2000 over there in CME land. We've said it in the past that it seems like a lot of the paper out here seems to be pretty far out and pretty far out of the money puts. Let's see if that's the case again this week, listeners. Let's see. As we're coming into showtime, we're at a 1399.60, just a hair under 1400 out here in the Russell. We were talking about 1600 not too long ago, so the worm has turned. But give it a week, and we all know Russell 2000 can swing. It says it's been about 5% swing just since last week's show. Vol obviously a little bit juicier out here. The hot contract out here was the weekly expiring in a day. out here. So kind of hard to parse skew and vol out here, but the vol is up pretty firmly out there. 12.5 points, or whatever that means with a contract with 1 day to go. The big prints out here, the 13.5 puts, Sean, so not that far out of the money these days, and these are expiring tomorrow. So a lot of hot and heavy action. That's kind of par for the course out here in the equities, though. It seems like maybe it's a bit of a vertical today, Sean. 13.5, 13 quarters on the put side, both trading with 1 day to go. So maybe something looks like opening slightly on the 13.5, so funky vertical out here. Mr. Sean, what are your thoughts on maybe some funky near-term verticals on the put side out here, and anything else you've been seeing line up your tape out here in the Russell 2000 options, sir?
It's close to expiration, so it's that short-term harvesting going on, and still people are looking for that protection even down to the last minute. So It's also a rolling of a strike as well. So really interesting trade. The index continues to move. It outperforms to the upside, as we know, since March 23rd. Small caps have rallied 42%, showing tremendous strong swings to the upside. And yeah, it's been breathing, but it's really an excitable, tradable index, and it's just good to see the liquidity there for clients to trade in the options along with the future. So it's healthy. I'm not foreseeing the fatigue with this volatility. I'm seeing active trading, and it's good for the complex. It's good for the investor community and the trading community.
Speaking of active trading, I mentioned in our Movers and Shakers report earlier, listeners, that wheat has been moving. This week it's moving to the upside. KC wheat up 6.5%, and our old friend, the Chicago wheat, up about 7.33% out here. So we're going to hang our hats out there. It's also the more active of the two contracts from an options perspective, listeners. By the way, you guys can find it for yourselves. Go to the ag drop down, go to the Chicago wheat, aka the SRW wheat out there. You'll see a lot more paper out there to parse. As a result, we talked corn last week. It's nice to see a little bit of the ags sneaking their way in. They haven't been moving and shaking a lot earlier in the summer, earlier in the year, but now they're starting to make our movers and shakers, which is kind of nice. So for all you ag heads out there who've been asking for more ags, here you go, getting a little bit of the old wheat this week. Coming into showtime, 523 3/4 on that contract. So we got 525 is our at the money strike out here, listeners. Seems like the month where the action was the most furious, the most hot and heavy out here this week, listeners, was out here in the AUG contract. Nearly half the paper, 48 and about 0.5%. That's par for the course with a lot of ags. Obviously, they trade on different cycles than a traditional equity or a metal or an energy contract would, because they have their own rules of engagement. The planting, the harvesting, all that good stuff tends to dictate where the paper flow aggregates. And this week, it's out there in the AUG contract. Again, nearly half of the paper. And let's see, vol actually up pretty firmly, which kind of is not surprising. You see how much wheat has been moving this week. You think a little bit of juice would be creeping back in there, and creep in it was to the tune of, we just talked about WTI, about 17 and change from a vol perspective. Wheat nearly double that. It's almost a 30, 29.90 or so, up about 3, almost 4 points this week. So not quite 2x WTI, but pretty volatile out here. So you're looking for a little bit of vol. Maybe the ags are where you need to hang your hat these days. Again, with pretty juicy vol, let's look at the skew out here in this AUG contract. The puts were 2% rich to the at-the-money, so they're actually cheap. So they were pretty much flat, which is kind of interesting. So it was a flat put wing last week. This week, puts getting a little bit cheaper, 3.3% cheap to the at-the-money. You don't see that too often in a lot of other products like the equities and things, so it's kind of nice to see a little bit of a different skew out here. The calls were rich, 3.2% risk at the money last week. This week, nearly 5%. So calls getting bid up. Not surprising, we're up nearly 32 handles on the week. So just from the Monday session to now, the This Weekend report, we're up almost 6.5% out here in the wheat. So strong week. Again, probably can see why the calls are leading the dance out here. It also was calls leading the dance from a hot strike, the most active option perspective out here this week. The 530s out here in August, doing the lion's share of the paper. Nearly 8,000 contracts. Almost all of that coming today. About 5,000 almost on the tape today. 2,200 yesterday. The rest kind of light throughout the week. So obviously OI means nothing. We have no idea what today's paper means from an OI perspective. Then number 2 are the 510 calls. A little bit closer. Actually in the money now. Out of the money earlier this week. Now in the money. These things doing about 6,700 contracts. The lion's share also today, 3,400. So a big mover today for wheat out here. 2,700 yesterday. That was opening with about 1,500 contracts yesterday. So slight opening on the 510 strike yesterday. Maybe today taking some of those off as we blow through it. Interesting stuff. Let's see how many. Actually, yeah, there are some puts here lighting it up, but we got to leave AUG to do it. We got to go all the way out here to SEP, 1 month past it. The 450 puts doing nearly 5,000 contracts this week, about 49.86. Again, almost all of that today. Today's a big day. 4,816 contracts, to be precise, out here. Back to AUG again. We got to go back to AUG to see the next hot puts. That's the 500, so the par puts pretty much doing nearly 4,000 contracts. The big day actually was Wednesday, 2,010 for those, and 1,700 today. So interesting stuff. Let's look a little bit farther afield. Don't see a lot of the longer-term crazy stuff in the ags the way we do in like the metals or even WTI. Don't see people tend to aggregate their liquidity. But if you like a little bit out of the money stuff, you got to go out to Dees. Then you get your 600 calls, listeners, doing 3,500 contracts this week. So pretty robust paper, and 2,300 of that today. So wheat lighting it up today out here, listeners. A lot of paper. Makes it hard to parse the OI, obviously, but still a lot of interesting stuff for us and for you guys to sink your teeth into here on the show. Speaking of sinking your teeth into things, you guys have a lot of questions about some other interesting contracts out here. I'd like to make sure you guys get your time on the show and also let you guys choose where we go sometimes as well. Remember, if you guys have a suggestion or product you'd like us to parse on the show, we're pretty nice guys. Hit us up. If it's a good one, we'll talk about it right on into our Futures Options feedback segment.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's get to it. A lot of great stuff in here. First off, Sean, I think you touched on this earlier in the show, but we have a question from Brooks. Brooks wants to know how many shares changed hands in this year's recon. Was it a record? I think this came in actually last week on the show, but that's your wheelhouse. I wanted to save it for you. So what do you have to say here for Mr. or Mrs. Brooks, sir?
Great question, Brooks. I'll say Mr. or Mrs. Mr. 1.57 billion, 1.5 billion shares, a little over 1.5 billion shares traded on the bell on June 26th, which was a tremendous record, noting $125 billion in notional as well. So it's really exciting to see us shatter that record from a year ago. And it's an exciting time. So, Brooks, thanks for the question. And again, feel free to reach out to me anytime. Happy to talk to you about our products.
How did I know you'd have that nugget in your back pocket, just ready to go, sir, out here? So there you go, Brooks. Ask and you shall receive. Next up, Masvit. Masvit wants to know, why do you guys focus on skew changes so much on the show? Well, I had this conversation a little bit with Russell last week on the show. You know, these are interesting times, interesting markets, and the skews for all these different products vary wildly, as you just saw. It doesn't matter sometimes even in the same complex, the skews can vary wildly. So that's what makes it interesting. You know, we talked before about the use cases for skew, what it means. In terms of overall sentiment, there aren't many better indicators out there because it's a real money indicator. I mean, you know, here on the network, we're big fans of those. Anytime real money is at stake, whether it's a straddle, whether it's some sort of skew or something else, that's where real dollars, real analysis is on the line. It's always going to blow the doors off of any sort of analyst estimate or any sort of other type of analysis that's done where there's no real money at stake. And obviously the skew indicates the options flow. Now, you can't just look at it and say that's what it means. You have to dig into the flow a little bit, see where maybe there's some certain flow dominating that. Maybe it's movement in one wing that's really making the skew move that much. That's why when I break down the skew, I break down the call wing and the put wing kind of separately. Because if you look at things like the skew index for the S&P 500, that's just one number. I think it's at a 145 right now, 146, which is high, but what does that mean? Is it because the puts are bid? Is it because the calls are offered? Is it a combo of the two? We don't know. So that's why you have to parse the two wings individually and see how much they've changed over the week. And that's why we do it that way here on this show. And that tells you exactly, is there sentiment for the calls? Is there sentiment for the puts? What's going on? What is the paper flow up to? So that's why we talk about skew a lot, and because no one else really talks about it. So if we don't do it, no one's going to do it out here, Masvit. But you guys seem to like it. I think it's useful information as you're trading these products, and there's so many of them out here. I guess this show could be many, many hours long. And maybe, who knows, maybe some incarnation of it in the future will be. But there's a lot to parse. And meanwhile, if you guys have questions about the skew, how it moves, how it shapes, how it changes, hit us up or go find reports for yourself and dig in between our episodes, and you can see these numbers exactly for yourself and how they all break down. That's why we like skew, Mazabit, because it shows you paper flow, what's going on in the product, and indeed it's a good sentiment gauge. And that's not always 100%, as I said on the show last week. Just because the calls are bid doesn't mean that things going to the moon. But last week when we saw people were pretty heavily fading WTI north of 40, it's a pretty reasonable estimate that's probably not going to hang out there or rally too much harder in the near future. And it could always rally again down the road, but in the near term is what we were looking at. Didn't seem like the flow was leaning that way. So that's why we break it down there in a nutshell, Mr. or Mrs. Mazabit. Let's go to some more product questions. Let's go to Alan Lee. Guys, can you break down copper on the TWIFO program? Well, we might be able to do that for you out there. If you want to do it for yourselves, listeners, you know where to go, cmegroup.com/TWIFO. Go to the metals drop down, then you're heading on out to base metals, getting away from precious metals. Look on copper, and you can see for yourself exactly what's going on. Now, copper isn't the biggest options story out there, but it is growing. You know, the knock on copper for a long time is this pretty much has been just a surrogate for Chinese demand. As goes China, so goes copper. And that's still pretty firmly in place, but copper has developed some of its own intricacies and nuances that has driven a little bit more flow into it outside of just what's happening in China. Of course, we did see an interesting resurgence with the Chinese market earlier this week, which has led kind of to extension of the bull until the last couple of sessions out here. Coming into today's show, copper's at a 2.845. It's up about 3.5% for the week. I'm sure some of that Chinese optimism playing into that number out there. The vol coming off pretty hard out here, so it's still a little bit more volatile than WTI. It's at about a 19.5, and in the front contract's actually about an 18 and a third. Both of them off about nearly 2 points this week. So front contract's close to WTI. The SEP contract is about 2 points higher than WTI from a vol perspective out here. In terms of overall volume, not the biggest contract. It does about almost 4,000 contracts on the tape as of a few minutes ago out here. The biggest month out here was SEP. 39% of the paper went up out there. So let's look at the skew really quickly. SEP has nearly 50 days to go, so it's a good one to look at. The vol out there is about 19.5, like we said, so about 2 points higher than WTI, even though it is off nearly 2 points this week. Skew-wise, we're looking at the puts are bid about 2%, and last week they were bid about 2%. This week they're almost 3% bid, about 2.7%. So getting a little bit more bid to the puts out here. Maybe some folks thinking this is a little bit top-heavy out here. Interesting stuff. The calls were about 1% bid at the money this week. They're now 2% cheap. So as we've rallied a bit, breaking through some of those strikes, maybe some of those calls coming in. It's not exactly surprising out here given how this performs. So people taking those calls off the table, crushing a little bit of that vol, taking their profits, and maybe bidding up the puts. So a little bit of that turning of the skew with a little bit of a rally out here is not exactly super surprising. The big print out here this week, and I say big, put it in quotes because it's big for copper, is the 2.81 calls. So in the money calls right now, did 464 contracts. 400 on Tuesday, 64 on Wednesday, 0 today. So that's our big print out here. Followed also by the 3 3/4 calls out here in Jan of next year, Jan of 2021. These did 450 as well. So a little bit longer term, pretty far out of the money call paper, lighting it up out here in Jan. So that's kind of interesting. The copper in the money stuff, in the money stuff for this month is perhaps not as surprising. So no huge changes out here in copper. That's one of the reasons I forgot who. Oh, Alan. That's why, Alan, we don't put copper on the show every week. But again, it's a lot more options paper to parse than some of the other names we saw, like lumber this week, which is number one mover to the upside, but only does 116 contracts. So at least there's something to sink our teeth into to the terms of 4,000 contracts. See, ask, and you guys shall receive. We're nice folks here. Let's see. Next up, Telor. Either way, it sounds like a sci-fi villain, but I like it. Telor wants to know, great program. Well, thank you, Telor. Is there a reason you guys don't include the COT reports in your analysis? Yeah, a couple of reasons. We like to do something a little bit different here. The COT reports are pretty widely available. Anyone can get those. So if you start parsing those, nothing really new or scintillating versus our TWIFO reports. That's kind of unique to this program. A. And B, the COT reports are lagging. That's old data. By the time you get the COT reports, it's already a week or two old out there. So it's telling you what happened a couple of weeks ago. I guess that's informative, but it's better than nothing, certainly. But we're looking at things that are happening right now in this week, and that's far more informative, I believe, than some sort of lagging and widely available. If you do want to count report, they're easy to find. Just type COT, that stands for Commitment of Traders Report, listeners. This is what the CFTC puts out on all the major products that it oversees. You can find them everywhere. Count report for whatever product you want. Fluid milk, lumber, S&P 500, you can find it all. Just type in what you want and you can get it. And that, you can sink your teeth into those. But I never found them enormously useful unless the product is really illiquid and the changes don't occur that often. Then maybe you can read a little bit more into that. But yeah, it hasn't been the biggest of drivers for me, and I think we have something a little bit more compelling here with a little bit more immediate data for you guys out here. All right, Sean, put your answering hat on again, I should say. Next question comes from Mooses. I like that handle. Mooses wants to know, does FTSE plan to expand more into derivatives beyond just RUT contracts? So, Sean, you talked before about the will they, won't they dance of RVX. Will it come back? We don't know. But Mooses wants to know even beyond that. You guys got other derivatives in the hopper for us, sir?
Well, Mooses, great question. But as you know, FTSE Russell is a global company, and we have indices representing a global representation of the marketplace. But just here in Chicago with our partner exchanges, you know, we have Russell 1000 futures, which is the symbol RS1. We have Russell Value, Russell Growth. Russell Value is the RSV is the symbol, and Russell Growth is R2G. So, you know, take a look at Russell 1000 futures, RS1. You know, interesting, large. It's our large cap index, and it's trading, and there's open interest. So it's a product for you to take a really good look at and see if you have a good experience trading the product. I strongly recommend you take a look. But again, we're global. You know, FTSE Russell has the FTSE 100 index and futures trading in Europe. We have the China A50 contract trading out of Singapore. We have a tremendous spread of products on the derivative side with partner exchanges around the world. So I hope that helps Mooses. But you know, check out the products at CME Group and SIBO Global because I think you're going to find a nice suite of U.S. based indices right here on our partner exchanges for you to trade and get some tremendous exposure and trading opportunity with. But their websites have all that, and so does FTSE Russell. We have a derivatives page if you wanted to take a look at that as well. And, you know, reach out to me. I'm happy to share any and all knowledge I have with what we do at FTSE Russell with you.
Yep, and there's more than just small cap. We talk a lot about it here, but there's more than just small cap. You know where to go. FTSERussell.com, FTSERussell.com is the place to go. Let's see what else we got here. Max, kind of getting back on a similar train some of our other listeners have had, Sean, that he wants to know, are we ever going to get OIV back? Well, the short answer is I don't know, Max. This is a frequent question from you folks out there. It's a popular one. OIV, of course, was the VIX of WTI, listeners. It measured pretty much the front month implied volatility. You know what VIX is, a little bit of skew baked in there as well, some weeklies mixed in, but it's mostly front month at the money implied on WTI. It was a nice little shorthand for people to see what's going on in WTI. Maybe you don't trade WTI every day. Maybe you're intimidated by the futures or futures options, but you can look at a number like that and get a reasonable sense. Oh, it's at a 40, it's at a 60, it's at a 20, and kind of get a sense of what's going on. So it was a great little benchmark. I recommend it to people all the time who are looking at dipping their toes into all things commodities. And then, unfortunately, the great kerfuffle happened, which was the dip to negative territory. We saw the last update on OIV was on May 15th when it hit 244.43 off 36 and a quarter. If you know anything about the VIX calculation, not exactly designed for negative numbers. So that really seemed to throw a wrench into the works. I don't know why it hasn't come back. I asked that actually to our buddy, Mr. Rick Rosenthal from the SIBO when he was on there, and he didn't know. And to his credit, it wasn't his department, so he probably shouldn't know. But still, it's an interesting question. Maybe I'll have to put it to some other folks at SIBO and see if we'll get the answer. Maybe CME as well. It's obviously a joint venture out there. But for now, unfortunately, we don't know there, Max, everyone else who's asking. I want it back. You guys want it back. It seems like it can be calculated again, so maybe something else is gumming up the works. We'll keep an eye on it, keep our ear to the ground there for you, Max, and hopefully we'll have some news to share with you on that front very soon. Unfortunately, listeners, that music means we've come to the end of This Week in Futures Options. Hey, remember, if you guys have a product like copper from Alan, or maybe a question like Max and OIV, or the COT reports, or FTSE Recon, any of that kind of stuff, you guys know where to find us. At Options on most of the major social media platforms. Usually it's live during the show as well, so you guys can hit us up there if you want to make it into the Mixler, or, of course, the website, theoptionsinsider.com. Or hit up Sean via his email. He'll answer things directly in between shows and all that other good stuff. We do have to hear from you guys. You guys help us shape the show. We want to know what you guys want to hear so we can put it out there on the show for you. You know, a lot of you like WTI and all that other stuff, gold and everything. We try to incorporate those whenever possible, but we also like to mix it up a little bit here, too. So you guys have an extra interesting, maybe esoteric product you want to see featured on TWIFO, hit us up. Let us know. We'll see what we can do. And Mr. Sean, if folks want to hit you up, maybe they have suggestions, maybe they want more derivatives like, who was it here? It was Mooses. Like Mooses did. Where should they go? What should they do, sir?
Reach out to me personally, smith@FTSERussell.com. I'm happy to talk to you about products, talk to you about our index products, talk to you about our global reach, talk to you about our products with our partners right here in Chicago at CME Group and Siebel Global. Happy to help you at all. But I do, Moses, check out RS1, the Russell 1000 Futures. Interesting product there.
There you go. Moses and everybody else, check out RS1. And, of course, check out the FTSE Russell 2000 E-mini over there, doing a lot of paper over there, and the RUT and all the other various flavors they're in. And, hey, if you want to... Maybe you like OIV, maybe you want RVX to come back too. Hit up the folks in SIBO land. Tell them to get off their duffs. We list these things. We could start looking at them and hopefully maybe even trading them again. Even though OIV never really tradable, but a good indicator nonetheless. And of course, if you want more data on that surprising stuff like dividend expectation volatility and a lot more, you know where to go. CMEGroup.com. Click on Eric and Blue's research. It's usually front and center on the homepage. Not hard to find, listeners. So go check that one out if you're so inclined, as well as, of course, you can find our TWIFO reports there as well. CMEGroup.com/TWIFO is the place to go. And on behalf of Mr. Sean and our friends over there in CME land, and of course myself, I'll thank all of you out there for downloading, for streaming, for subscribing, for listening live, and of course for sending in your questions. Keep those coming. We love to hear from you. And we'll see you back here tomorrow for Volatility Views, 1 p.m. Central, 2 p.m. Eastern. And then it kicks off again on Monday with the option block all the way through to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.